Okay, good morning and welcome back, everyone, to our Tuesday morning market outlook session. Let's go ahead and get started as there is quite a bit of shifts in the broader markets here over the past week or so. Before we get started, what we are going to discuss is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we discuss during today's session. As always, we will start off by taking a look at the major equity indices and taking a look at how they currently have rotated over the past week or so. We'll also take a look at how fixed income markets have responded, which largely have not been very much. All same thing from the commodity markets, but we have seen a significant move in the sector rotation model and specifically some of the subsectors that are currently on the move before taking a look at some of the bullish and bearish ideas that we currently see here in the broader markets. So when we look at the S&P 500, if you look at the daily chart, the longer term chart here, we've held these shorter term moving averages here over the past couple of weeks, and we've now finally managed to break back above that level. Not only have we broken above those moving averages, we've also broken above this 444 resistance level here on SPY. That really puts the all-time highs around 454 or so back into targets for upside, and we continue to see some strength here in this morning before the open on what has been fairly strong corporate earnings, and also relatively good news coming out of China with Evergrande making a debt payment here. So overall, risk is very much in the on position here at the broader moment. When we look at the NASDAQ 100 index, very similar price action in terms of getting back above the shorter term moving average. But the difference between the NASDAQ is that it's still currently below this this resistance level. It does seem like pre-market we will open above that level, and that would certainly retarget that 383 all-time high here to the upside on the NASDAQ 100. As you can see, momentum also just turning positive here on both the NASDAQ and the S&P 500. When we look at small caps, this is really where we do not see a lot of participation here in small caps, and it remains range bound, not breaking out here. So small caps remaining in this tighter and tighter triangle that it keeps trading into. So when we trade into these types of apex triangles, this will usually resolve themselves in a big breakout one way or another. So we are yet to see truly where that breakout is. We'll have to see how the other two markets correspond and respond, and perhaps we might see small caps break out higher here, but so far we're not seeing that. Same thing on the RSP, the equal weight S&P 500 index. Yesterday, not making a new high, basically confirming that the market breadth here is being lagging behind a little bit. Now, this is really, at odds with some of the other things that we're looking at. The Dow Jones Industrial Average, also same thing, not making a new all-time high or new relative high here on yesterday's price action. But if you look at the number of stocks participating in this particular rally, we now have a fairly significant improvement where 52% of all stocks are trading above its 50-day moving average. So if you look at this chart over the past few months, we've seen a significant decline in terms of participation. We're starting to see a little bit of an uptick in terms of participation. So this could be somewhat of a good thing for the equity markets as we start to see more and more stocks participate in these rallies. But over the past day or two, this is a metric that has not continued to rally here. So we'll continue to monitor this particular metric to see if there's a broader participation, more stocks trading above its 50-day moving average. We would really like to see that confirmation here, especially get over the 60% mark. That'll really help confirm this rally and have a little bit more confidence in the rally that we're currently seeing. When we look at the bond market, TLT broke below this $46 support level here. It traded all the way down to about 141 or so, and it's rallied all the way back up to 146 as a resistance level now. And the question is whether bonds now start to sell off. So far, even on yesterday's rallies, we have not seen bonds rally in conjunction with stocks. At the moment, 146 is still holding, so our hunch is to look for more sideways and more range bound motion back down into that 141 range or so. And that's going to put yields again into this 160 basis point, let's call it equilibrium level, similar to what we saw back here, where yields range between 150 and 170 in terms of basis points. That's our expectation here in the short run at the moment for yields. And if you look at gold, the gold continues this long-term downtrend that we have been in. And as you can see, it's been very, very choppy, but that choppy price action has remained in this range-bound range. And we recently tested the top end of the range, and gold was rejected off that level. Our expectations is for gold to continue moving lower here in line with its broader downtrend. When we look at oil, oil has broken out again above this the $76 level here. This has been a major support and resistance level since 2014. And when we look at the breakout here above 76, we continue to see higher highs in price. We're starting to see a little bit of exhaustion as we make higher highs in price. Momentum is no longer confirming those new highs. So we're starting to lose a little bit of momentum here to the upside. But at the moment, we have broken out above 76. We may see a little bit of a pullback here. As long as 76 holds, we can continue to expect oil to rally here going into the winter at the moment. And then when we look at the sectors, we've seen a big improvement here in terms of the sectors. From 2 weeks ago, we only had two bullish sectors here, financials and energy. As of last week, we saw that improve to 3. And this week, we see this improve to 6 new sectors that are now, 7 sectors that are now bullish, with only 3 neutral sectors and 1 bearish sector, which is utilities. So big improvement we've seen here over the last week or so in terms of the number of sectors that have managed to turn around from what was a fairly ugly looking chart here in terms of the number of sectors to a pretty big turnaround here in terms of fairly strong comeback on the overall sectors. When we look at sector rotation here, we're now seeing 6 sectors in the weakening and lagging category and 5 sectors in the improving and leading category. And really, we've seen very little in terms of gains, in terms of relative strength. We've seen some big moves in terms of momentum. We've seen financial lose a ton of momentum. We've seen energy lose a ton of momentum. We've seen consumer discretionary yesterday gain a fair amount of momentum. But the big winners are really technology and real estate. We see communications have started to lose quite a bit of momentum here. Industrials and materials, while the only 2 in the leading category, are slowly losing quite a bit of ground here. So right now, we see a lot of shifts here in the moment with a rotation back into some of the higher beta sectors, and real estate, and then the lower beta, the kind of the more defensive sectors, have really lost a little bit of ground here in terms of staples, financials, and even energy that has been leading this market for quite some time. So when we dive into the individual sectors themselves, we see technology breaking out above this 155 resistance level and looking for a continuation higher here back towards the 160 all-time highs when we're looking at technology. So that breakout is constructive for technology to continue to rally, something that we've seen technology lag behind, but it's very much back into number 1, number 2 category here at the moment. But I think the big winner yesterday was discretionary. Big move here above what has been a fairly long range of a trading range that we've seen here in terms of discretionary. It's been in this range since the beginning of the summer, and we now see the breakout here above this range. Now, this doesn't particularly project significantly higher because, as you can see, there wasn't a big move to enter this particular range, but it does project up to maybe in the 194, 195 range here to the upside for consumer discretionary. But as you can see, the moves over the past couple of days have been extremely strong. We very much are already near those targets. And if you want to look at the longer term chart here, when we draw a channel, XLY, consumer discretionary, very much already at the top end of this channel. So this could be one where we may see a little bit more of a fade to strength rather than a continuation higher here. And then if you look at healthcare has certainly shifted here to the downside. We broke below the short-term moving average. The long-term moving average so far has held as resistance, but as you can see, we've had the moving average crossover on the daily chart. We've rallied back towards the 21-day moving average, but it's so far as being rejected. So healthcare very much in a much weaker state versus the other sectors here at the moment. So pay attention here to the sectors. There's a lot of movement here, but sometimes we might want to look at fading the strength, like especially in consumer discretionary. But we have seen a lot of movement here in the subsectors. If you look at lithium, LIT, lithium and battery technology, a similar price action to consumer discretionary in terms of range bound, but recently breaking higher here above that $87 range here. So the fact that we've broken out on fairly significant volume, this projects potential significant upside because we did have a strong rally going into this trading range, and now we've broken out, and there's a significant upside here for lithium and battery technology, something that a lot of investors have been paying attention to, but the fact that we've been range bound for multiple months and now we've gotten that breakout is the potential opportunity. Another one that I've been getting a lot of questions on is KWEB, the Chinese internet ETF, whether it's time to start looking at a bottoming opportunity. And we certainly seemingly have found a bit of a bottoming formation here. As you can see, the long-term moving average has largely held as resistance this whole time. But so far, it looks like as of this morning, we're starting to see a breakout higher here prior in pre-market. So this is potential opportunity for KWEB to at least get back to the $55 level. You have a gap fill at $60. So you really have, a nice target here between 55 and 60 to the upside. That's about a 10 to 20% uptake here on KWEB. So that bottoming formation certainly seeming like we're near that bottom. XHB, home construction, also similar type price action here from the perspective breaking out above its longer term moving average, the 50-day moving average. It's doing so on a fairly significant volume here as well. So this is also constructive here. If we look at home sales data here earlier this month, the economic numbers fairly strong here. So when we look at the XHB home builders ETF, we're really looking at some potential upside to that $79 and potentially $80 all-time highs. If you look at the ETF, it includes a lot of the names like Home Depot and Lowe's. Those are some of the ones that are the names that are driving the upside here in XHB. And also transports, Dow Jones transports, as you can see, breaking out above what has been a fairly significant downtrend here. Recently breaking above that downtrend, breaking above the short-term moving average and the long-term moving average and this 255 resistance level that has held for quite some time. So this really puts transportation back into the positive note here. As you can see, the daily momentum has turned positive. The weekly momentum just turning positive here as well. Certainly looking like it's completed this bottoming formation and is heading back towards that 280 all-time high for transports. And then looking at some individual opportunities here. The semiconductor space has not been particularly strong here, but we have a few names in this particular space, NVIDIA and ARM. Both NVIDIA and ARM recently has completed a pullback here and has started to rally off of that pullback. As you can see, this long-term moving average that has held multiple times so far has provided that bottoming formation and is now starting to be constructive to revisit the 230 all-time highs and potentially break out above that all-time high here for NVIDIA. So we've seen the semis become weak, but NVIDIA potentially breaking out higher here. If we look at CF Industries, CF Industries, a predominantly maker of fertilizer, so in the material sector here, we've seen this big breakout here above this $58 level. And so far after breaking out, it's made two multiple pullbacks to the $58 level and holding. This certainly puts this for a fairly constructive upside here above $58 or so. CF Industries in the materials space. If we also look at Marvell, this is another semiconductor name, but one of the strongest in my opinion, especially when you look at AMD, NVIDIA, and Marvell. I think those are the three of the strongest semiconductor names we currently see here in the broader markets, recently reaching a recent all-time high of $67 or so. This is, again, fairly constructive for further upside, especially when we look at the semiconductor space. There's very few that are outperforming the sector, and these three are the ones that you want to focus on here at the moment. We also have Microsoft breaking out above its all-time high, and Microsoft has really struggled at this 305 level for multiple months. It's made a fairly significant pullback here, but has rallied significantly off of that and is now potentially breaking out two new all-time highs, or has broken out to new all-time highs yesterday on fairly significant volume, and will likely see a continuation higher here for Microsoft. Another one that I want to take a look at here is Snapchat for earnings. Snapchat reports earnings later this week. As you can see, after breaking out above its trading range, it's been spending the last couple of months really kind of building a base here. And so far, this is the expectation that I'm looking for going into earnings. This is one of the few of the stocks that are really outperforming its technology sector at the moment, and has the opportunity of breaking out higher here going into earnings later this week. Thermo Fisher, when we look at the health space, there's not a lot of life sciences companies that are beating the markets here at the very moment, but Thermo Fisher very much on a strong uptrend. I think this recently has started to show some strength here, especially on relatively strong volume here, has the opportunity of revisiting the 620 all-time highs that we've seen in Thermo Fisher here to the upside. And then when we look at to the downside, you have some names like Abbott Laboratories. You know, these guys have been making, the COVID rapid tests, if you will. We've seen some deceleration here. You know, we've made a higher high in price that had the massive negative momentum here to the downside. And since it's broken below the long-term moving average here, and so far this long-term moving average is now acting as resistance rather than support. And if we look at the daily chart here, it really, after falling apart, has failed to even get back to the 21-day moving average and is starting to trade lower here again. We have negative momentum on both the long-term and short-term charts. This leads me to believe that there is potentially further downside here for Abbott Laboratories as the long-term momentum has turned negative. Another one on the downside is Kellogg. When we look at Kellogg, the chart, just look at the long-term chart. It's not heading in the right direction. And after spending, quite some time in this very choppy range-bound motion, it's starting to break below some significant support levels around 62.5 or so. It's broken this significant level here to the downside. We've seen momentum on the long-term and short-term charts turn negative, and this targets, in my opinion, some further downside here well into the high 50s or so for Kellogg as it continues to underperform the broader markets. And then we look at a stock like Dollar General. Consumer discretionary and consumer staples. We've seen Procter & Gamble earlier today report earnings stating, issues with inflation. I think you have Dollar General that's going to get squeezed very much in this particular space, both from a supply chain perspective as well as from an inflation perspective. If we look at Dollar General, it's already broken below the long-term moving average and has now come back to retest that level as resistance. And when you look at the short-term chart here, after falling apart, it's rallied back to that short-term moving average, was rejected, rallied up to the short-term moving average, and our expectation is to look for a similar type price action where it continues to be rejected and move to the downside. As you can see, the long-term momentum recently turning negative, and also the short-term momentum has been negative for quite some time, and we're looking for this particular rally to be the opportunity to seek some downside exposure. So overall, markets have certainly shifted quite a bit here over the past week or so, certainly for the positive. We're not quite out of the woods yet because participation on the market rallies is not It's improving, but it's not quite as strong as we would like to see. Hopefully those things improve here a little bit over the next few days and perhaps next week or so, and we can be a little bit more confident in this market rally. With that, that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding as to what we're currently looking at here in the broader markets. And with that, thank you so much and have a great trading day.